Okay, folks, if you want to live in the U.S. and drastically cut back on your property taxes, your income taxes, I'm going to show you how to do that. And I'm also going to show you some extra steps that will even get it lower, okay? And you can pick the choice that you want based on, the conveniences or inconveniences you're going to run into, and then make your decision from there. Also, folks, if you want to legally get around high income taxes or how to get a second passport as quick as 4 to 8 months, do 3 things. Hit the subscribe button, the right of your screen right here, and you get new videos automatic as they come out. And number 2 is I would like to hear from you. If you got a question or comment, put it below. Number 3 is go to our website, www.citizenshipquickly.com, and just ask for some help. Okay, let's look at Florida. Florida is, in my opinion, probably the best state or close to the best state in the U.S. Nevada is very good too, but I like Florida just for topography purposes and other things too. I like it better than Texas because Texas has a high property tax, whereas Florida does not. Florida, you can literally get your property tax down to double digits. Okay, when I say double digits, I'm talking about you can get it in the 0.8 something percentiles. Okay, and in fact, you can actually get it a lot lower than that. But I'm going to just show you the average in the lowest counties, and then I'm going to show you how you can kind of wheedle down from there. I'm also going to show you, now Florida, most people go there because there's no state income tax. And you can also save on property taxes, okay? But you still have 2 things that are killers, okay? They have the FICA tax and you got the federal income tax. I'm going to show you how you can legally get those 2 to 0, but you're going to have to do some things that are inconvenient, okay? Things that you don't like. It's going to be like walking on glass or hot coals. So it's not going to be for everybody, okay? Now, going to Florida, I like it better because it's not as hot as Texas. The last time I went to Texas, it was Dallas. It was 108 degrees. I forgot the year it was, but it was like Dubai. It was incredibly hot, okay? It's too hot for me. And then you're looking at the, again, that you have the property tax that in some places it's over 2% in Texas. Now, let's look at Florida. I'm actually going to give you the 10 cheapest counties as far as the lowest property taxes that you can run into. Now, there was a good article that came out in Corvée, and it was talking about this, and it was talking about the Sunshine State attracts hundreds of newcomers on a daily basis, and many people actually move there for the purposes I just mentioned to you, because Florida does have beautiful beaches. It's got great weather all year round, and no state income taxes. That's what a lot of people like. Now, what are the tax advantages of migrating to Florida? Now, one of the biggest tax perks is the lack of state income tax. And Florida is one of the few states in the nation that doesn't make its residents fork out money on state income taxes. Now, on the flip side of the coin, you still have to pay sales and property taxes. Now, every state's going to have their taxes, but I'm going to show you how to get around that legally too, okay? Now, even at that, there's a silver lining. Florida has the country's lowest property tax rate. Now, who owes property tax in Florida? Now, any taxpayer who owns real property in Florida is subject to the property tax rate. This includes any individual or business and any land that's owned, including rental properties or gifted through an estate. Now, I'm going to show you how you can legally also get around income taxes on properties, okay? Now, again, you're going to have to walk on hot coals. There's going to be some things that you're going to have to jiggle around and say, do I really want to do this? But I'm going to show you how to do that too. The property tax system requires owners of any building or land to pay taxes based on the value of the property and the predetermined tax rate for the area. Now, how is the property tax in Florida actually calculated? Not only do the property tax rate vary from state to state, but they also vary from county to city. Now, Florida's property taxes are usually collected on a county level by local tax authorities instead of by the state. Now, each county may have its own method for the assessment and collection of property taxes, which tend to be the lifeline of the local governments. But tax rates are typically easy to find. Now, taxes are levied on homes and land are used to fund roads, parks, schools, first responders, law enforcement, and other type services. Now, property taxes are calculated on the assessment value of your property times the tax rate. Now, assessors usually take three things into consideration when determining property tax liability. Number one is they look at the property tax rate for the area. Number two is the property value. And then number three is the assessment. And now, what is the current tax rate in Florida? Now, to put the tax rate in context, at the end of 2021, the average property tax rate across the U.S. was 1.09%. This is based on the median home value across the U.S., which is $222,041. Now, hence, the median amount of property taxes paid in the U.S. is $2,412. The annual property tax rate in Florida is about 0.89% versus triple digit in the U.S. And you're looking at the average home cost around $215,300 US dollars. So the median property taxes paid in Florida are roughly around $1,914 US dollars. But now you got to keep in mind, these are personal property taxes, which now let's look at which counties in Florida have the lowest property taxes to even break it down lower. Now, if you look at the lowest counties as far as property taxes go, I'm going to start with number 10, which is Madison County, which is located on the Panhandle. What you'll find out is the Panhandle has some of the cheapest counties for property taxes. And this one, Madison County, is located along the Panhandle in the north central region of the state. And the median property tax in Madison County is only $736 a year. Number 9, ninth cheapest county is a county called Levy, which is located along the Gulf Coast in the northern region of the state. And the median property tax in Levin County is $735 US dollars a year. Number 8 cheapest is going to be Franklin County, and Franklin County is located in the Panhandle along the Gulf of Mexico. The median property tax in Franklin County is $726 a year. Number 7 is Calhoun County, which is located in the Panhandle also, which is the northwestern section of the state. And then you got Liberty County, which is nestled in the Panhandle of the northwestern section of the state. The median property tax is in Liberty County is $695. This is getting closer and closer to zero now. Washington County is number 5. Washington County is located in the northwestern section of the state of the Panhandle. The median property tax here is $687 a year. Next one is Hamilton County with only $668. And this is the north central part of the state. Jackson County is the next cheapest at only $630 a year. Holmes County is $555 a year. And then you got Dixie County, which is the cheapest county in Florida. So if you want to get your property taxes close to zero as you can, Dixie County is going to be the cheapest. This is in the northern section of the state. Dixie County has the lowest at $503 US dollars a year. Now, it looks like the counties in Florida with the lowest median property tax rate actually fall within the northwestern and north central part of the state, with most of them being in the Panhandle, which I've mentioned. Now, the next steps is property taxes tend to be higher in areas that are experiencing rapid housing and population growth. Keep an eye on the factors that could affect the percentage of property taxes you pay, which is important, ensuring to save you money as far as in the future goes. You want to ensure your strategy or real estate is tax advantage. Now, this is the key thing that I would be looking for. I know it's hard to do this, but you need to be picking areas that maybe properties have not gone up that much. And you might want to do some studying to find out the ones, because not only do you want to keep your property taxes down low, you want to pick areas that really haven't had this big explosion growth in Florida. And that's how you're going to be getting low property taxes, because those areas haven't gone way up. But these are also areas, if you pick them right, will have huge potential of growth. Now, how can you take this step further in getting this down? Remember, I told you the property tax in Florida is the average property tax in Florida was in the 80s. Now, the key thing is, if you want to get it down even lower, I'm going to show you how to do that. Now, what you want to try to do, though, is you're looking at roughly 0.89% is the average This is the annual property tax rate in Florida, which is roughly about 0.89%. The ones I gave you, the figures are even lower. But what about if I could show you how to get your property tax down, not to 0.89%, which is the annual property tax rate in Florida, but what about if we could get it down to 0.20% with a huge deduction before you get that, okay? This is how you do it, okay? And also two other things. I'm going to show you how, because in Florida, remember, you're still going to have to pay FICA taxes, which is roughly 15%. You're also going to have to pay for the federal income tax. That's the biggest tax anyway. Now, you can avoid the state income tax, okay? You can lower your property taxes. But what about if we can get your property taxes down 4.5 times the 0.89% Florida average property tax, and also eliminate not only your state income tax, but eliminate FICA tax and the federal tax? Now, how do you do that? Well, it's not going to be easy, okay? Because you're going to have to do some things maybe you don't want to do. You're going to have to pick yourself up and you're going to have to move outside of Florida, okay? Now, the reason you're going to have to move outside of Florida, because in order to get around the federal income tax, okay, and the FICA tax, you're going to have to move to a place that's going to qualify you for the foreign overseas exclusion. So you're going to have to move outside the U.S., and you're going to have to be outside the U.S. long enough to qualify for the foreign earned income exclusion. Well, Tom, I don't want to do that. I didn't say you had to do that. I'm saying if you want to take a step further, I'm showing you how to do this, okay? Okay. If you just want to do what I just showed you, you can move to Florida, okay, and live in a great place. But if you want to knock this down 80% more on your property tax, 100% on your federal tax, and also keep your state income tax where it's zero as you got it in Florida, but you're knocking everything back almost to zero, you're going to have to get yourself up. You're going to have to fly outside the U.S., and you're going to have to be outside the U.S. long enough to qualify for the foreign earned income exclusion. You're still a U.S. citizen, okay? You can move to a place that doesn't have a state income tax. Now, the Cayman Islands is a great place. St. Kitts is a great place. I like St. Kitts better than Cayman Islands because it's a lot cheaper cost of living. Cayman Islands is incredibly expensive. A box of cereal is through the roof. St. Kitts, there's not that much difference in St. Kitts prices than U.S. prices, especially if you stick with fresh fruits and vegetables, okay? And you're like a 3-hour flight from the U.S., Florida, and even places like maybe North Carolina. And there are direct flights in Atlanta. You have direct flights from Atlanta. You got direct flights from Miami, Florida. You got direct flights from North Carolina, Toronto, New York City to St. Kitts. So you can be there in like 3 hours. It's 3 to 4 hours right in there. So it's a very quick flight. And you've just now increased in the ability for you to lower your taxes across the board even more. Now, how much can you actually reduce your taxes by doing this? Okay, now the foreign earned income exclusion is something that the IRS has allowed in the U.S. for years. And what they've done is they've actually each year they have gone up on it, and they've gone up considerably over the last several years because of inflation. Now, the foreign earned income exclusion, there's a symbol they use for it, or abbreviation. It stands for, it's FEIE, which stands for Foreign Earned Income Exclusion, okay? And you have what's called the Foreign Earned Income Exclusion Limit, which I'm going to tell you about today. Now, every year, the FICA or a FEIE exclusion amount is adjusted for inflation. Now, for income earned for 2023, the FEIE maximum exclusion amount was $120,000 US dollars, and it has been set to increase to $126,500 for 2024 tax year. Now, this is per person, okay? So if husband and wife actually do a joint return, they work, outside the country, because both of you would have to be outside the country so many days per year, okay? You both can qualify for that. So you can take, for 2024, you can take $126,000 times 500. Folks, that's over $250,000 a year. Plus there are other tax deductions on top of that. You can also, if you get a foreign corporation to pay your salary, okay, then you can avoid the FICA tax, because foreign corporations don't have to pay a FICA tax if they're a foreign corporation to the U.S., okay? And you're getting paid a salary from the actual foreign corporation abroad. So if you've left Florida, now you don't have a state income tax just like you don't with Florida. But if you qualify for the foreign income exclusion, now you've knocked the federal tax up to over $250,000 a year if both people are filing and qualifying for this income exclusion. And if you get a foreign corporation to pay your salary, you can skip the FICA tax, okay? So I've just showed you all these different ways that you can lower your taxes literally to zero. Now remember, the foreign income exclusion does not help you on investment income. It only does it on earning income. If you want to get around all income taxes on investment income, there are ways that you can do it. Easiest way is to relinquish your U.S. citizenship. There are other ways you can do it too. You can actually manage properties overseas. I'd have to sit down and show you. We've got other videos on that where you're the manager and you can, the income that's paid to you, okay, which you get an exclusion on that income up to a certain part of the year. Could be earned income that's paid out to you, but it could be investment income off the property. But somebody's going to have to manage those properties, whether you pay yourself or you pay someone else. Okay, so you can lower that quite a bit on the because you get a tax deduction from the actual rental properties. Okay, because remember you cannot use that foreign earned income exclusion on the rental properties that you're making abroad unless you relinquish your U.S. citizenship. Okay, even if you're a U.S. resident with a green card, you're still subject to all these. The easiest way to do it is to relinquish your U.S. citizenship. Or you can still get your income taxes down to zero. I just gave you some examples, making over $250,000 a year, qualifying for the foreign income exclusion. Now, we have accountants that work with our firm. We don't do it ourselves. We refer you to those firms. We actually deal with the citizenship. We show you how to actually do a lot with, because you can do a lot more if you've got a second passport. I've got other videos on that. You can look at that and see how that works. Also, if you want to lower your health cost almost down to zero, pretty close to it, if you're a citizen of St. Kitts, if you go in a hospital in St. Kitts with your medical and you're at least 62 years old or older, most of your, almost all of your income or your expenses, or mostly all of your expenses from the hospital cost would be picked up as long as you're a citizen and you're over 62 years old. If you're under that, it would be incredibly cheap, a lot cheaper than what you pay in the U.S. Okay, I mean, there's no comparison. So I'm showing you ways how you can get your health costs down almost, and you don't have to carry Medicare or Medicare supplement to do it. It's only because you're a citizen of St. Kitts. And isn't it completely ironic that St. Kitts doesn't have an income tax? No capital gains tax, no estate tax, no inheritance tax, and it's got all these benefits. And you're not subject to all these military requirements. So if you've got children and you want to avoid some sort of draft that you have in the U.S., one way to do it is not to be a citizen of the U.S. and be a citizen of a country like St. Kitts. They don't have a mandatory draft, and they're not involved with wars every year, okay? Where you're going to have to maybe where the draft is brought back in, where you're drafted or your kids are drafted, your grandkids are drafted. You want to get around that, this is the way to do it. Okay, that's other videos I've got on that. So these are ways that you can do it. If you want to learn more on this, go to our website, www.citizenshipquickly.com, and just ask for some help. And I would like to hear from you. If you got a question or comment, just put it below. And again, don't forget to hit the subscribe button on the right of your screen right here, and you get new videos automatically as they come out. And I look forward to talking to you on the next video. Take care.